Hi everyone, welcome back to your channel. Today we are diving into the sharp rebound in gold prices on Thursday, October 23rd, ending a two-day losing streak as investors turned at safe haven assets following fresh US sanctions on Russian oil companies. The renewed geopolitical tensions have boosted demand for gold while investors now brace for upcoming US inflation data due on Friday. Spot gold jumped $27.58 to close at 4,125.93 per ounce dollar, recovering from Wednesday's 2 week low. Earlier in the week, on Monday, gold had reached an all-time high for 4,381.21 per ounce dollar before suffering its biggest single-day drop in 5 years on Tuesday and extending losses into Wednesday. According to Peter Grant, Vice President and Senior Metals Strategy at Zener Metals, or the fundamental factors that have driven gold higher this year remain in place. Some investors are taking advantage of the pullback while renewed geopolitical and trading tensions likely contributed to today's buying. Similarly, Christian Borjan Valencia of FX Street noted that gold prices moved back above the key 4,100 level as dollar buyer positioned ahead of the US CPI reports. He added that President Donald Trump's sanctions on Russian oil companies Lukoil and Rosneft have received geopolitical demand for safe haven assets. At the same time, the White House reportedly planned to tighten restrictions on software export to China, adding another layer of uncertainty to global tech markets. Heavy Chan and Analytic Advantage Global Prime compared the recent movement of an hour stretch rubber band snapping back. After an hour extended rally, gold is behaving like a stretched rubber band returning to its natural state. She said gold film held above 4,000 per ounce dollar suggests this is a technical pullback rather than a fundamental shift, with safe haven demand still intact. On software export to China, adding another layer of uncertainty to global tech markets. Hebin Chan Analytic and Vantage Global Price Prime compared the recent movement to an overstretched rubber band snapping back. After an hour extended rally, gold is behaving like a stretched rubber band returning to its natural state. She said gold firms hold above 4,000 per ounce dollar suggests this is technical pullback rather than a fundamental shift. With safe haven demand still intact, Trump's new sanctions fuel safe haven demands. President Trump on Wednesday announced his first major sanctions of his second term, this time targeting Russian oil giant Lukoil and Rosneft over the ongoing war in Ukraine. Analytics said the latest US sanctions mark a major escalation in Washington's pressure campaign against Moscow, unlike earlier efforts that focused on price caps imposed by the Group of Seven. This move directly targets Russia core energy producers, a step that could have wider implications for global oil supply and markets. George Leon, head of geopolitical analytics at the Restart Energy, described the move as significant and unprecedented escalation in the U.S. pressure campaign against Moscow. Adding to the tension, source revealed that the White House is also planning new restriction on China use of U.S.-developed software in response to Beijing curbs on rare earth export and higher port fees on U.S. flagships. All eyes on U.S. inflation data on Friday. The U.S. Bureau of Labor Statistics is the set of release to Consumer Price Index (CPI) data for September. Economists expect core CPI to remain steady at around 3.1% year over year after a brief delay caused by the government shutdown. The report could provide the Federal Reserve with its clearest signal yet on inflation stand before next week policy meeting. Markets have already priced in 25 basis point rate cut, with traders expecting a total of 50 basis point in rate reductions across the Fed final two meeting of 2025. Gold, which does not yield interest, tend to platform strongly in low rate environment as investors look for alternative stores of value driven by geopolitical risk, economic uncertainty, expectations of rate cut, and strong central bank buying. Gold prices have surged nearly 57% this year alone. JP Morgan Chase recently raised its forecast for gold, predicting that prices could average 5,555 per ounce dollar by fourth quarter of 2026. Trading outlook for gold. According FX Trade Analytic Christians Borgen, Valencia gold upward momentum resumed on Thursday but failed to break above Wednesday high of 4,161 per ounce. A move above that level, he said, could open the door to a test of 4,200 per ounce. Momentum indicators like the relative strength index RSI show growing bullish trend. If buyer maintain control and push prices beyond $4,200, traders may targets $4,250 and $4,300 with potential upside to worth the record high of $4,380 and possibly $4,400 per ounce in the coming session. So, in short, the new US and action rising geopolitical risk and anticipation on inflation data have once again brought gold back into the spotlight. The market's reaction showed that investors still see gold as ultimate hedges in certain times. That all for today's update. If you find this video helpful and informative, don't forget to like, share and subscribe to the channel for more in-depth financial insight and market analysis. Thanks for watching and see you in the next video.